Welcome back to Real Estate Mindset. Today's video is gonna be absolutely bonkers. Now, the data is in, and today, guys, I'm gonna do this entire video literally completely unscripted. I literally don't know what I'm gonna say next, but what we're gonna do is we're gonna talk about some really bad things that I've noticed as a professional that are happening in this industry. And we're gonna pull up a Fox News article that's gonna go into Zillow's report about how home buyers don't shop for their mortgages. And I'm going to add you guys also, and again, I'm a loan officer and I'm a realtor, so I understand what I'm saying. But what I also want to make a point on is you should also shop your realtor. And the reason is normally purchasing a house is the biggest financial transaction of your life. So use the absolute best professional, right? I don't recommend, cousins and, things like that. Use someone that understands negotiating and that can essentially protect you from being bullied. So we're going to go into a lot of that today, you guys. But remember what I'm always saying, shop people, make sure you're working with someone great, because in my opinion, a great loan officer, a great realtor, they're worth their weight in gold. The problem is it's really hard to find them, you guys. It is really hard to find them. And I understand why the public hates realtors and loan officers. I get it. There's so many bad ones. So I'm not sitting here defending that, right? The industry is horrible in my opinion, but my point is they're important, as is a loan officer. So understand that you should shop your mortgage, and also you should consider the level of skill the loan officer has. But either way, you guys do me a favor, like this video, subscribe if you haven't already, shoot me a comment below. But remember, I am not your financial advisor, okay? Even if I want to be, even though my bio is as a realtor, loan officer, and instructor in all things real estate. Plus I'm renting. I'm sure I'm going to get some haters. Oh, you don't own real estate, but I'm going to save that for the comments. But regardless, guys, let's hop into this article now. Okay, guys, so this will be linked in my description. The name of the article is Most Home Buyers Don't Shop for Mortgages. And this is according to Zillow. Here's why not comparing mortgages can cost you money. And it can, you guys, so pay attention to this article, because you need to make sure that the people that you're working with are legit. When it comes to researching which purchases best fit their finances, buyers said they spent more time browsing for cars and vacations than they did on mortgages. Okay, so that was a survey that Zillow put out. And to me, how the heck is someone spending more time on purchasing a depreciating asset like a car instead of a mortgage? It's so depressing. 72% of prospective home buyers reported that they have not shopped around for a mortgage and they don't intend to. By contrast, survey respondents said they spent a month researching other items before buying them, including their next car purchase, 28%, their next vacation, 23%, and this one's really sad, their next TV purchase of 12%. Can you guys see that we have a spending problem in society? Only 13% of respondents said that they spent a month researching mortgage lenders before they applied. Almost the same amount as people searching for TVs. So in other words, this survey is saying that people hold the same value as a TV than a mortgage. Do y'all see why this is so upside down? Nearly half, 46% of would-be buyers applying for a mortgage only submitted one application, which puts them at risk of missing out on significant savings throughout their mortgage. While TVs offer warranties and replacement plans in case something breaks, sometimes you only get one chance to get the right home loan structure and strategy in place. Markets move, home values go up and down, and qualifications can change, which makes it critical to work with a local expert that can offer you several different programs to make a concrete decision for the long term. I absolutely agree with that. If you think you're ready to shop around for a mortgage, oh, here's a list of, okay. So obviously reading this article, you guys, obviously there's a billion advertisements in there. They want you to shop their mortgage loan officers. But great points here, because the reality is you can save a lot of money by switching loan programs. If a loan officer is not explaining to you the difference of conventional FHA mortgages and potentially first-time homebuyer programs, you may want to keep shopping. I mean, that's the reality, right? You may want to keep shopping. As borrowers, we want options, right? We should ask for options. But unfortunately, you guys, 13% of people are doing that, okay? A lot of pain can be saved with proper research. Here's how much borrowers can save by comparing rates. Even one extra quote on a mortgage can save borrowers an average of $1,500 over the life of the loan, an average of about $3,000 for 5 quotes. And savings can fluctuate more when the economy is in decline. So, I mean, $1,500 over 30 years. Yeah. So also, guys, that's why I said their skill level is important, because the interest rates are usually going to be about the same. But the savings, you guys, the savings generally comes from due diligence, right? If the loan officer does due diligence, make sure you see if you qualify for first-time homebuyer programs like Home Possible, Home Ready. They're doing their job, right? But the other thing is unfortunately, some, not all, but some loan officers will get lazy. And if a customer is happy with what the quote that they give, they'll stop. When the reality is someone probably should get multiple quotes. I know it depends on why they're purchasing. So in bad economic times, the gains provided by rate shopping are even greater. For example, during one such period in the depths of the global financial crisis, borrowers with a $250,000 mortgage could have saved $5,000 on average if they would have got 5 offers. So it is proven, if you guys shop your mortgage, you will save money. The odds are, right? You will save money. I know it's not a lot. Again, there's another benefit of shopping, not just, you saving $10 a month, but the quality of character and professionalism with your professional, right? I cannot tell you how important that due diligence is, guys. And you won't know that unless something goes wrong, right? And I've seen a lot of things go wrong. So that's why I'm saying what I'm saying. Despite the potential savings, many Americans reported they didn't mortgage shop. Here are the top 3 reasons why. 30% were worried shopping will hurt their credit score. Here's the thing, guys. Once an inquiry is pulled, there's a grace period. Now, I watched a video where this woman said the grace period's changed. The last time I looked, the grace period is 30 days. According to her, though, it changed to 2 weeks. But my point is only one inquiry will hurt you as long as it's in that grace period. So at least for the first 2 weeks, you run your credit 10 times, only the first inquiry will hit you. So although that is a fair concern, there are things that protect you, okay? Here's the second thing. 24% were happy with the lender they contacted first. Now, I get it. I like it. I think that, if a loan officer is putting in a ton of work, getting you the information, that you should stick with them. You should show them loyalty and appreciation. But still, though, it's a big deal. It's a lot of money. So they still need to show you, that it's worth it financially, right? But I'm just saying the skill does matter, right? Now, 19% said they didn't want to spend the time shopping for mortgage. So 19% of people said, the way I'm looking at this is they were too lazy. When buying the biggest financial transaction of their life, they were too lazy. And I got to tell you guys, the lazier that we are, the more expensive things will get. The article continues. Focusing on credit is another way buyers can save money. This is great, and I want to talk about this at the end of the video. A separate Zillow analysis from earlier this year showed that borrowers with excellent credit between 760 and 850 could be saving up to $103,000 in mortgage payments over the life of the loan. So in other words, by shopping your mortgage, you can save on average about $1,500. But the bigger thing, by working on your credit before buying a house, you can save $100,000. So what's more important, right? Yes, shop your mortgage, but your credit is way more important. You guys, I had a bankruptcy, repo, and foreclosure, okay? I know how important credit is. So when I was struggling, on top of having bad credit, I got penalized. It's so depressing. You guys, fix your credit. It's really easy to fix your credit. It's usually all about it's usually about not being late and utilization ratio on credit cards being low. Okay, let's continue. Buyers with fair credit scores between 620 and 639 may be paying up to $288 more on their monthly payment. So bad credit, you're going to pay roughly $288 more a month. Isn't that astonishing, guys? Y'all see how important credit is and why we shouldn't rush the home buying process? Home buyers should take the necessary time to make an educated decision on their mortgage. It is often the largest financial decision someone makes. So Zillow, never mind Zillow. Taking time to understand their credit report, repair any issues, and consult with a qualified mortgage professional can make a significant difference in home shoppers' experience. In conclusion, here is the point that I really want to hit home. Treat the transaction as it's meant to be treated, like the biggest financial transaction of your life. Understand that you should shop your realtor and you should shop your loan officer. But again, you guys, when you find someone that's great, I'm telling you now, it is rare, and you hold on to those people the rest of your life because they are rare and they are generally amazing, amazing professionals. Again, it's just so rare. It's just most people are not. I mean, an overwhelming amount of people are horrible, in my opinion. But also understand this, becoming a winner and saving money will always start with you. And the absolute best thing you can do right now is improve your current position in this market. Right now, we're on timeout. We're on the sidelines. Some of us were forced to the sidelines. Some of us, like me, are on the sidelines waiting. But the thing is, guys, is as we wait, don't get complacent. As we wait, improve the three things that matter. Credit is one, right? Stop going out to eat. Stop using your credit cards. Start paying your credit cards down, starting with the lowest one up. You want every credit card to be well under 30% of your credit line. The second thing, assets or savings, right? One great way to save more money is understand how you're spending money right now. I use a program called mint.com. And again, I'm not affiliated with them in any way, but I love using them. It's a free app and it tracks all of my spending. So when I go in and I review my spending, I know what I need to stop spending on. And usually it's going out to eat. Okay. It's going out to eat and subscriptions. All right. Those are two huge things, guys. But again, save money, figure out what you're wasting your money on, download an app or a money management tracking system and figure it out. Now, the last thing, guys, is income. Here's the thing with income. The job market's hot. Labor market's hot. Get a second job. But for qualifying reasons, you're going to want to try to make more money at your existing job, right? Try to make more overtime, bonus, and commission. And the more money that you make, generally, the better qualification you can get on a mortgage. Now, other than that, guys, I really hope you guys got some value, insights, and perspective from today's video. And if you're out there investing in real estate, I wish you luck and I hope you win.